love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream.
All right, good morning, good afternoon. Welcome back, everybody, to the last live stream of the year. Hope you're doing well and hope you had a decent trading year. You know, I've been watching some other shows. I actually, believe it or not, watch a ton of trading content. What I really like is I like to, well, right now I have so many different things that I watch, but I've been watching a lot of Tasty Trade. Tasty Live, if you guys are familiar. A lot of you who may know Chris Pulver that comes on and hosts the show often, you may be familiar with Tasty because he uses their platform. He's I believe he knows those guys pretty well. So anyways, I was watching that and it started getting me thinking about just like changes that I potentially want to make to the stream next year. The stream has come a long way. Like, how long did it take you to become profitable? That's a good question. It took me about 2.5 years to get to the point of profitability. But here's the thing about like profitability. What I had to do to realize, or here's the thing. My concept of what a profitable trader was when I first got started compared to what it actually is was completely wrong. My thought, and maybe some of you guys feel this way as well. Also, by the way, as we get started, if you guys could do me a big favor, hit the thumbs up button and comment where you're tuning in from. I'll try and say hello to some of the new people that I see in the chat. So where was I with that? Oh, yeah. So my concept of what a profitable trader when I first started was, I thought like profitable traders somehow just had like a secret strategy that they weren't really revealing to everyone, and that they had some like, you know, really, really good ability to call what the markets were going to do next, right? So that was my concept of what a good trader was. So in my mind, when I first started, a really good trader was like an ATM machine. They could just like print money from thin air with their trading abilities. That was what my thought of what a good trader was. And I was actually completely wrong with that. Good traders are just taking like 52% odds over and over and over and over. They're wrong almost half the time. And in fact, a lot of traders can actually be wrong more than half the time and still make money, right? Like for me with my primary momentum trading strategy, I'm wrong more often than I'm right. And yet I make money with it because my winners are much bigger than my losers, right? So my concept of what a profitable trader was was very different than what it actually is. A profitable trader just makes slightly more than they lose over time. And that's not very exciting or super attractive sounding, but it's the truth, right? Good traders just make more than they lose, and they keep doing it over and over and over. And it's not like they're making 50% per month. They're making, a couple percent per month, averaged out, compounding it month in, month out, over and over and over. All right, we got some people coming in here. Good morning. Good morning. Thank you very much for the kind comments. Good morning. Happy New Year. Hello from Serbia. Is it the new year for anybody yet? Maybe only like Australians, maybe? I don't know. Ventura, is it Ventura or Ventura? County, California. What's up, Nick? Happy New Year. Thank you. Appreciate it. Greetings from Afghanistan. Let's talk about what's going on in the markets here. Today is technically the last day of the trading year. I said it wrong in my video. Yesterday, I said yesterday I said yesterday was the last stock market trading day session. That was incorrect. Today is the last day that the U.S. stock market will be open. So it is open on New Year's Eve. Let's talk a little bit about what's going on so far today. You got the S&P 500 trading around 59.37. Not making too much of a move this morning. Just a slight bounce back. It seems like this support level is still trying to hold here for stocks. S&P holding up at this time. Nasdaq also a little bit of a bounce back. I'm back very modestly in the green on this position that I've got. Dow Jones, a little bit of a bounce, and the Russell, nice little bounce here. I actually have a trade on the Russell now, which is kind of fun. I sold puts on the Russell. Japanese stock market still stuck in this range. The Chinese stock market was up a little bit during the session, and the VIX is down 3%. So good to know. And then we've got gold. Gold sitting still here at support. Probably the most boring thing on my list right now. Gold is just crawling into the new year. Literally just crawling past the finish line to get into 2025. It's just not moving. It's just not got any directional bias at this time. I mean, you could go down to the 4-hour time frame and you could see just how choppy that is. Just horrible, right? Just no follow through on the daily chart, which is what, of course, I use to trade primarily. So, there may be some trends that you could take advantage of on the lower time frames, but really it's just, too indecisive. Gold's can't get past this level, and it's just not really breaking out to the downside either. So really just chilling out. New Year started in Australia. That's awesome. Happy New Year to everybody. I'm looking forward to 2025. It's going to be a fun year. We've got a ton of fun stuff coming at A1 Trading. You guys know we're always cooking something up back in the kitchen, building some new tools. We're going to make some live stream improvements to make this show bigger and better. Yeah, I hit the like button. Thank you, BGP. I appreciate that. Yeah, if you guys could hit the like button, really helps just to get the show out there to more viewers. Silver, look at silver, guys. Silver is just in a rough spot here. Can't seem to catch a singular break. Man, this has been a rough pullback, right? What was a pullback looks like it may even be turning into a bigger, broader downtrend. Silver was at one point up to 34.8 or so. We've lost 17% of value on the price of silver in just a couple months. So is this a big pullback? We'll see. I actually have sell puts on silver, so I am kind of willing to buy the dip, but it's more of like a dollar cost averaging approach on silver. I wouldn't mind owning some. Specifically, I have sell puts on SLV. So we'll see where that one goes. Oil had a big day yesterday. Let's see if oil can actually break through these highs. I actually do like oil. It's on my watch list as a possible setup. Here's oil. a +7 bullish reading on oil. That's pretty strong. So I actually, I'll be watching for some oil plays. I have a position on ExxonMobil, which is of course an oil hemisphere kind of related company, but the actual price of crude oil and West Texas oil, what I'm looking for here would be a breakout. If we can get a breakout, there's a possibility that I could play the long side. We've been stuck in a range here for so long on oil. I'd have to see, to be honest, the trade that I really want to take on oil would be a break up into the mid 70s and then looking for that pullback. I actually like that setup quite a bit. So I like oil going into the new year. Now, you might say, well, Nick, isn't Donald Trump going to drill a ton of oil and make oil prices go down like crazy to help with inflation? That's like the theory. But here's the thing. The other theory component is, why is oil getting a bullish reading on the edge finder? We can't ignore, a huge component of my trading results come from the edge finder. Straight up, it is what I use to source data. It's what I use to build biases, and it contributes a lot to my personal trading strategy. So I can't ignore my system, right? This is my engine behind the scenes that helps me find trading ideas. So when we have oil giving me a bullish reading, I have to ask myself, why is that? Well, we can actually go to the data scanner and let's go play around with oil for a second. So if I go industrial commodities, I've got oil pulled up here, and I can take a look at the pieces of this story, which are telling me why oil prices or why oil is getting a bullish reading on the edge finder. First of all, the commitment of traders data. COT shows institutional money is long, and they just recently added more long positioning. Okay, so big money likes oil long. Interesting. I'll potentially watch that. That's one part of it. Retail sentiment, retail is also very long, so that goes against us. It's kind of a contrarian indicator, so that's not necessarily as bullish. Seasonally, it's maybe not the best time, but hey, let's check seasonality for oil next month. We should do that right now. And I know there's lots of charts that everybody wants to get to, but this is actually a potential trade for me, and the rest of my team is off for the day, so please bear with me. I'm going to be just running the ship solo here on the stream. So let's talk about January. Okay, so January is not much better for oil. I looked at the month-to-month seasonality the last 10 years. Oil is a rough month in December and in January. Picks up in February, and then kind of in March, slightly negative, positive, 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 negative, 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 negative. So seasonality wise, not a huge thing. Loving this oil dive, bro. We'll see if we can find a trade. I mean, I use these streams as my analysis sessions, and I don't hold back or try and make it more exciting than it is. I know that most people want to pull up the stream. They want to see me looking at technical charts. I get it. I've actually studied the retention charts of my YouTube channel, and I know that people like when I'm pulling up the technical charts a lot. And then there's like the tryhards and the committed ones that don't mind when I pull up the edge finder. I'm genuinely looking for trade setups myself before going into 2025. I like the oil idea. I just want to go through and understand this bias. So trend is clearly flipping to the upside here. But again, where I think you have to prove this, and trend, what we use for trend, our trend filter, is a 3 and a 14 moving average. And what we do is we say if the 3 is above the 14 and the slope of the 14 is up, that is how our system is systematically calculating trend. So right now we're in an uptrend on the daily chart, although resistance is right here. So I need to see this thing break through these highs at the very least in order to look for a possible trade continuation here. I think my first attempt on oil could be a break of this resistance, 71.50, and a pullback into it. right? I would like to see it go test this area at least. I know there's this little wick on top. Give me something like this, a break to the upside, a pullback into this area, and then I'd be interested in potentially trading the break to the upside. So I like oil, but I need to see technicals line up nicely with this. So let's continue on. GDP numbers. This is easy, right? GDP numbers. The U.S. GDP growth is really impressive right now. The U.S. economy seems to be upbeat and making moves. So I like this. Why is that bullish for oil? Right? You guys want to do a quick quiz time? We had a small live stream today. It's only 176 people watching. By the way, thank you for being here and Happy New Year. If you guys want to quiz yourself, fundamentally, let's think about this. I'll ask you guys a question. Why is GDP growth, manufacturing PMI, for oil prices to go up? Do you want these economic readings to be strong or weak? Comment them in the chat. Nick, what if a company makes a software like yours paid with ads? Dexter, that's optimistic thinking, but ads, I run ads all over the place. I have a lot of experience running ads. They pay like pennies for nothing. So to run our company, we'd go out of business trying to do everything free with ads. It just, YouTube ads, I'll put it in context. I have 2 video editors that produce and edit the live streams, our videos, our content, marketing material for the Edge Finder. That's not even including the rest of our staff, right? There's a marketing person, there's a development team, there's sales and support team, and then our content editors. All of the ads across all of our platforms, all of our views. My channel almost has between all of our channels, we have like 600, 700,000 subscribers, not just this, my Trader Nick channel, but other ones. If I took all of the ad revenue across all of our stuff pays for one video editor's time. We have a 10-person team. So that does not even include the hundreds of thousands of dollars that we've invested into building this software. So ads are a weak way of paying. What we found, and this is just straight up being transparent, the reason we can make awesome tools is because we charge premium prices and we cater to serious traders who have a little extra money. That's just straight up being real with you guys. Just like Apple has expensive quality phones and they sell to, people who can afford them. That's how they make the best product. We've mimicked that model. Our tools are not free and they're definitely not cheap either. We sell a premium product and we have a wonderful team of people that dedicate their full-time careers to building it. So, we charge money for our stuff and that's why it's good. And that's the thing is, next time you think about like, oh, something's too expensive, well, just ask, is it good enough to justify the price? And if the answer is yes, that's why it's good enough, right? High prices are much better for building a quality tool. And then other people will sometimes say, well, Nick, why don't you make the price really low cost so you can get your volume up on these tools, which is also a really terrible idea because per customer that uses our tools, there's fees on our end and a ton of support that has to go into it, right? We have a support team that helps customers who have questions. Naturally, with a software like this, we have a lot of questions. So if we made it so it's like $10 a month, we would have a flood of people who all have problems, difficulties, questions. There's costs on our end per user, right? So the point is, we don't administer, we don't cater to low cost, which I know sounds kind of like mean, but it's just straight up is capitalism, it's business, right? We're trying to make a great tool. We need to optimize to make the tool the best it can. So we charge higher prices, one-time fees to serious traders who want to buy our stuff. That's the reality of it. Again, the tool is only as good as it is right now because our model of how we make money with the tool. The tool would not be able to fund all these cool projects if we were trying to sell it for $10 a month, or if we were to try and do like an ad revenue type of thing, there would be no money. So without any money coming into the company, we can't turn around and build such awesome tools. Okay, that was my rant. And I went way more into that than I meant to, but it's a subject I'm passionate about because I've thought about it a lot. Like pricing the Edge Finder is not an easy thing because we know people want the tools and we know that it's expensive for some people, but we also know we want to make the tool very good. And with that, you need to administer to the crowd that's going to be able to help fund that. Yeah. Yeah. I mean, it's not like in an ideal world, the Edge Finder would be free and we'd have no development costs on our end. But, you know, the world is the world. Appreciate you, Mattio. I like that. It's a cool name. I'm now investigating your tools through watching you right now. I really like it. The UI is nice and clean, very easy to navigate. I'm glad you're going through the market using this to show us. Yeah, I mean, that's the other thing is if like you're just not at a place where you can purchase the Edge Finder, totally cool. You can watch videos and see people using it. You know, whenever we do these streams, multiple people use the Edge Finder on stream. So yeah. Appreciate you, Gideon. Yeah, if you do want access to the Edge Finder, there's a promo code in the description down below. I'll drop a link here really quick. If you are interested in checking out the tool and you respect the vision, right? Here's what you can do. If you'd like to purchase it, head over to a1trading.com/edgefinder, and here's the code YTVIP for subscriber discounts. Cool. That's awesome, Gideon. Yeah, pick up a copy if you would like, and if you have any questions, you can head over to a1trading.com/contact, and we'd be happy to help you out. So, sorry for the delay. Let's get back to this oil idea. We're not in a big rush because, you know, markets are a little quiet right now, but let's also talk about this. You guys got it right. I saw a lot of your answers. Strong economic data is generally going to be stronger for oil prices. And that just makes sense. Think about this. If the global economy is bustling, there's going to be way more demand for oil, right? So what we track is the lead economy of the world, the US, right? So that's how we score oil. Maybe in the future, we'll take a look at like global economies more. But with the US economy being so dominant and so important, that's what we really focus on when scoring the Edge Finder for oil. So we take a look at GDP growth. GDP growth really strong compared to forecasts, right? What we do is we look at forecasts versus what actually comes out. Manufacturing PMIs actually beat. Services PMI missed, so that goes against our score. So we've got some positives here. And what you'll see here is 99% of the time that you have a reading on the Edge Finder, it's not a perfect read, right? Sometimes you get mostly blues and a couple reds. Sometimes you get mostly reds and a couple blues. Sometimes you just completely get mixed. So right now, when we look through the economic data, PMI data is a little bit mixed, but retail sales showing strength for the consumer. Inflation statistics looking half decent. Employment data a little bit mixed, right? Because unemployment rate has been rising a little bit, but we've still had strong jobs growth as well. So interest rates also, you know, where they're going can also impact oil. So right now we're getting a nice +7 read. That to me is enough of a confirmation to then start looking for possible setups on the chart. And this chart is really choppy. So I'd love to see like a big fat green candle and then looking to pull back and looking for entries. That's really what I'd like to see for oil prices to get me involved. But yeah, very, very curious. Yeah, please don't spam. I'm running the ship solo today, so I have to delete your comments if you spam, because then I can't see other people's stuff. As a newbie, what's your advice? Backtest, watch a ton of content. Don't trade live until you've taken a demo seriously for a year. That would put, honestly, that would put so many people in a much better place if they just did exactly what I said. Backtest, trade demo for a year. Bitcoin's making a move here, guys. We're somehow back in positive territory. It looked like I was going to stop out of my Bitcoin long. I have a stop loss below this structure. Price came down, tested support. And this is why we had the stop where it is. We gave price just a little bit more room and seemingly finding support. Looks good. I'd be thrilled to see Bitcoin actually take a stab, get back up into the 100K area, and potentially go back and retest that 108 level. I personally, I'll say this, I personally don't think the run for Bitcoin is over, obviously, because I'm long. But next year, I think that we're 2 years into a bull market for the stock market. I don't think it's over. I don't necessarily think that for the stock market and for risk assets, you're going to have an absolute amazing year. I don't think you're going to have another 25% up year like you did in the S&P, but I do still think that there's upside for stocks. There's upside for Bitcoin. You got to think about it. There's a couple really key things. You've got the Fed that still seems to want to cut rates. You've got Donald Trump, who uses the stock market as a scorecard for himself. He talks all the time about stock market stuff and how he wants the stock market to go up. They call that I've listened to people calling that the Trump put and the Powell put, right? Basically, they have downside protection to these assets because both of these players kind of want the markets to move up. Powell doesn't necessarily want the market to move up. He wants to keep inflation coming. He wants to coming down. He wants to cut rates, right? So, something to think about. Nick, you not well? I actually feel great. You're probably I'm just very lax today. I'm not wearing, my typical collared shirt and in the office. And I did shower today, but I usually do up my hair a little bit more than this. So just the rest of my team is off for the day. I just figured I would live stream to kind of end out the year strong. I have a long position on the Nas, long position on Bitcoin. I closed out of a dollar Swiss long position. Of course, it's continued off without me. I was actually looking at yesterday as it started. I closed out right here. Price started coming down. I was like, okay, great. I'm going to look to get back in if we can get a drop. No drop. Continuing higher. Are you streaming until the New York Open? Yeah, I think so. Felt like you have a little cold. No, actually, I am thankful. Everybody seems to be getting sick. I don't know. Can you guys confirm wherever you are in the world? Does it feel like everybody is getting sick around you? A lot of people... my wife and I had like a little gathering at our house. We just moved into a house, by the way. I'm in my new unfinished office space at our house. And we had a bunch of people come over, but a lot of people backed out because they were sick. Right? It seems like everybody's getting sick. Can you check out the Nikkei? Yeah, let's look at the Nikkei. Why not? I realize I need to do more chart requests. So if you guys have chart requests, please drop them in the chat, and I will do my best to rapid fire look at charts for you guys. Also, I want to make sure that I do this more often because I've realized that not everybody who's watching the stream is in our Telegram channel. If you're not in our Telegram channel and you have Telegram, straight up, come join us. I just dropped the link. It is free to join the Telegram channel. So if you like the YouTube version, you like to see charts and stuff that we're looking at, ideas, things like that, absolutely make sure that you're also in the Telegram channel because we, throughout the day, send out chart ideas, things that we're watching. So take a second. Just pop that open and join the Telegram. If you're a regular stream viewer, if you're a big fan of the show, we also put up updates in there. So make sure join the Telegram if you have not already. The link is now in the chat. Okay, so some requests for gold as always. Look at S&P 500, US 30. You can check the Dow. Gold skyrocketing. Okay, let's look at gold. That is not a skyrocket. We have two different definitions of a skyrocket. I guess if you're looking at like the 1 minute, you're like, oh my gosh, it's skyrocketing. 2606 up to 2616. I don't know. What do you guys what time frame do you guys trade on? Can I ask that? What time frame do you guys trade on? I have navigated slowly over my years of doing this. First thing I did is I traded the 15-minute time frame. I was never profitable on the 15-minute time frame. I moved up to the 1 hour. Then I moved to the 4 hour. And I still trade the 4 hour chart, but my favorite time frame is the boring daily chart. Daily time frame. I know so many. I was having a conversation with a friend of mine who is also a trader. Actually, I know one person, well, two people. Frank works for me, but he's also a trader. Him and I have been good buddies for our whole life. Frank's a trader. He comes on the stream sometimes. You may be familiar with him. I know him. I know one other trader, and it's a friend of mine. He came to our house gathering party the other night, and him and I were talking about, he's a lower time frame trader, and he was asking me, like, how do you do it? How do you trade the daily time frame? That would stress me out, just holding trades. And I literally said back, I was like, I don't know how you do the lower time frame. To me, it's the same thing. It's super stressful to me to try and, make out what's happening on the 5-minute chart, which is so sporadic, so blippy, right? So kind of back and forth. And, the costs of trading are very high when you trade the lower time frame. Because you got to think, if your spreads and commissions are like this much of the trade, you got to be, just to get to break even, right? And it's not that much. I know it's not that much, but like, you get what I'm saying. Like, spreads and commissions play a big factor when you are trading the lower time frames. To me, the daily chart is beautiful because it's very clear. It's also very low cost to trade the daily chart. Although I know some people who trade on Forex brokerages or CFD brokerages would argue that swaps are very expensive, but I don't trade on a Forex or CFD brokerage. I trade on a stock brokerage where my holding costs are like nothing. So I much prefer the daily chart and the 4-hour chart. Those are my two favorite time frames. I also do love looking at the weekly, especially for longer term plays that I'm in. But for my active trading stuff, I primarily love the daily chart. There's nothing stressful about holding on the daily chart. I think it's just the concept of like, you have to sleep on positions, and some people don't love that. I've said this so many times. If you have trouble sleeping with your trading, like with positions open, my recommendation to consider is to go back and look closer at your position sizing. If you can't sleep, you're waking up in the middle of the night because you have positions on, the position size is just too big. It's worrying you too much, right? If I have a position on and it's keeping me awake at night, the position is reckless. It's inappropriate. It's too big. It has to be reduced, right? Hey, Nick, I really appreciate your hard work and your awesome content. Happy New Year to you and all guys in advance. And sorry for some English mistakes. English is not my first language. Mohammed, thank you very much for the nice comment. Happy New Year. Thank you for watching the stream. Your English is wonderful. Okay, so I'm going to look at some more charts. So gold here for me, I know a lot of people requested gold. Gold is just, there's nothing to do here. Like, and I'm not trying to sound boring, but I've looked at gold for the last few weeks and it's just not making any move. So because I trade many charts, I don't have to stare at gold and like count the seconds until it starts moving. I've said, many times what my thought process on this one is. I need it to either break support, right? Which I would argue is this area, 25.50 to 26.15 or so, or to break resistance, which is this struggle bus of an area up here, 2,700, right? So if we can break these levels, if we can break out of this range, like if we see something like this, big break, then we have something exciting to discuss. We have a downtrend, but right now we just have a choppy, range-bound gold chart. And until that changes, there's no trades for me to place on this. I don't really see any strong enough catalysts. Gold has good catalysts on both sides. The US economy looks pretty dang strong. That's a bearish catalyst on gold because it strengthens the dollar. Dollar is suppressing the price of gold a little bit because take a look at the dollar, right? Dollar is just killing it. So that is going to hurt the price of gold to a degree, right? At the same time, central banks are seeing inflation mostly come down, which is a positive catalyst for gold. And you have uncertainty amongst geopolitical stuff, right? Taiwan, China, Ukraine, Russia, the Middle East, right? So you have all these things that are uncertainties that could be positive catalysts for gold. But again, I just don't see right now a clear reason to be a buyer or a seller of gold. It's too mixed. And the other thing is that I'm looking for a more clear signal from the edge finder, and gold is literally getting a neutral -1 score. So there's no bias for me on gold, and that has kept me out. This reading on the edge finder has probably kept me out of a bunch of trades that I shouldn't have taken, just because, again, I love trading gold, but there are times to not touch it. And that's been recently, in my opinion. You know, you might have a different strategy than me, but for me as a momentum trader, you know, if I tried to take a breakout or you know, buy gold here, that would have been multiple losers there. If I tried to short this thing, it's not followed through very well. So I'm just not really interested in gold at this time. Once it moves, you guys know I love trading gold. I will definitely trade gold when I can see the right setup forming and I get confirmation. Right now, much more interesting stuff is oil to me. The Nasdaq, which I'm already long. Some dollar crosses actually look very interesting. So someone also asked me to take a look at the Dow Jones. I'll take a look at the Dow as well. Dow also not a very attractive chart to me. On a longer term basis, I still think you're in a nice uptrend. In fact, we're testing the 100-day moving average. Check this out, guys. 100-day has come into play here twice now and bounced off this level once. Let's see if we can start to actually round out and bottom out. And if you get this little movement here, then I love the Dow. Like if we get a nice confirmation, a bounce off this, and we can break through resistance, that looks really good for maybe a bounce back recovery trade on the Dow Jones. So I like the Dow. But I also don't have confirmation right here. I have a neutral +4 reading on the Dow Jones. If I could get the trend to start flipping to the bullish side, there is your last couple points that would get us very much on the bullish side. So Dow Jones is on the watch list, but just need the technicals to play nice, right? So I'm looking for a technical move higher on the Dow Jones in order to potentially get long. Love that setup. But really the key thing here is going to be that break right there. Give me that break of 43,200 and I'm looking for momentum trades on the long side favoring the Dow. Currently, I like the Nasdaq. Nasdaq looks best to me. And I have a stop loss in my trade. So if I'm wrong about this, right, my stop loss is just below this spike low. In fact, I don't know why my stop loss got moved. It did not get hit. But I have a stop loss just below this wick low from that Friday sell-off in the pre-market. What I'm looking for, again, if this takes out those lows, I've got to stop out. And if it can recover here, what I'm looking for specifically would be a break through some of these key levels of resistance. If you give me this kind of move, right, I'm going to look to start trailing stops and locking in profits and trying to hold on to the Nasdaq going into New Year. I still like the Mag 7 trade, right? The big companies, Apple, Amazon, Microsoft, NVIDIA, Tesla, Broadcom now in that list, I would argue. Very interested in staying long those dominant names, which have had a lot of the growth and a lot of the returns for the S&P 500 in the last few years. I like staying with those trades because they're working, right? I'm a trend follower. The trend right now tells me stay bullish on the winning companies of the US stock market. That is going to be your giant, you know, magnificent 7 companies: Google, Microsoft, NVIDIA, Apple. Although I don't love Apple as much. Apple, I would say, is one of my least favorites in the group. I like Google quite a bit. I own some Google shares. Anyways, that would be my pick of the indices for now. So we'll keep an eye on that. On the bearish side, actually, let's do currencies for just a second. Let's do a currency focus here. Been looking for some more dollar setups. I made some good money on the USD CHF long position that I shared in our Discord server. Let me see. Where's my Discord server here? So yeah, I closed out my USD CHF long position yesterday. Made some good money on this one. In the currency world, I have been using a dollar cost averaging approach. So why don't I like Apple? I'll talk about that in a second. Maybe we can whip out the stock box. So dollar Swiss, I've used a dollar cost averaging. What that just means is basically instead of taking a heavy position with a tight stop loss, I take a tiny position with no stop loss. And I know, sacrilegious. What do you mean no stop loss? Trading without a stop loss is something that is controversial, but isn't everything controversial in trading? Most of my trading that I discuss on my YouTube channel, I do with what I call the TTF strategy. The TTF strategy is called the true trend following strategy. And the reason I call it the TTF, or the true trend following strategy that I use, is because I only exit trades with my momentum strategy using a trailing stop loss. So let's say that I catch a breakout and I buy this entry, right? And I put a stop loss here. I put no target on my trade. A lot of traders will say, I'm going to target the previous high. I don't really do that. I trade where, okay, the market moves in my favor. Great. If we put in a higher low, like if we break through these highs and put in a higher low, instead of taking profits here, I trail my stop loss. Where do I trail it? There. And then if we do this, I trail it here. And I continue to do that until it inevitably stops me out, right? So I'd be stopped out there. Why do I do that? And why do I call it the true trend following strategy? Because true trend following is lagging. It's a lagging indicator, right? You know, people love to point out like indicators can be lagging, moving averages can be lagging. My exit strategy is incredibly lagging on purpose, because when you follow price and lag price, yes, sometimes you get out at a really bad point, but other times you get out at exceptional points. When I lag a trend, I give a trend a lot of room to run, right? So if I'm, and why do I say it's lagging? Well, because look, what if this went up here, came down here, came up here, and then did this? That happened to me with SMH. Many of you guys might be familiar with that trade. I had a 40K profit turn into a minus 8K trade. It sucked. Now, I work on a larger capital basis, so it's not like it was a devastating loss to my account. It was about a 0.8% loss in the account, but still sucked. But my point is, when you lag price with moving average or a trailing stop method like I do, it is lagging, but sometimes lagging can be really good. You lag a trend, a good trend, if you use a lagging way of exiting, can keep you into monster moves. Like let's just say, for example, you went long here and you just slowly lagged price with a moving average, right? If you had stayed in this thing, right, you may have a stop loss like right here. If this thing doubles back, takes you out, that's still much better than had you like taken profits over here, right? So it performs very well when you have a very strong trend, and it underperforms when you don't. That's the downside to my momentum trading strategy. I also use a dollar cost averaging strategy for Forex specifically, as well as a mean reversion strategy that I use options for within stock equities and ETFs. let's say price drops, and I can either do one of two things. I could trade this with a momentum strategy where I, again, am looking to trail stops quickly, which has its downsides, by the way. If you use this strategy, sometimes it really stinks. Sometimes you just get stopped out a bunch of times and you don't catch good big trends for a while, and you can enter a good drawdown. So don't get me wrong, that's not a perfect strategy. Nothing is. Or you can use dollar cost averaging, which, let's just say all these levels, I'm willing to build a position on the dollar Swiss. Risky, but so is everything else in trading. Instead of taking a big position here, let's say I take a tiny one, like a 0.01 lot if I'm trading Forex. And I take another one there, and another one there, and another one there. If this thing tanks, yes, there will be drawdown. But there will always be drawdown, no matter what strategy you pick. When you dollar cost average, the key thing is to use the smallest possible size that you possibly can, because sometimes trends can be massive against you. So when it comes to currencies over the very long term don't trend as well as other things from my studies and experience of like the Nasdaq, even Bitcoin, gold, silver. Those things trend nicer. Currencies are not very friendly for a lot of trends. Now, if you caught, this reversal and trend, but even this, you can see like the long-term bearing of this chart, dollar Swiss, has been very range bound. So I like dollar cost averaging in currencies because most of the time it works really well. Not all the time. And if you position size it appropriately, it can blow the account. But I trade tiny dollar cost averaging sizes. I use 0.01 lots. I just have the ability to add many of those over time if I want. But again, Forex also makes up a small component of what I actually do with my trading capital. Most of my trading capital is in my stocks and options brokerage, where I trade things like the Nasdaq through QQQ, SPY, Dow Jones, gold, Bitcoin. I do all of that in my stock brokerage. Nick, why don't you trade range markets? I love trading range markets with dollar cost averaging using Forex. In fact, that's one of my favorite ways to trade Forex is when stuff is ranging. But when I'm trend following, I hate ranges, right? I want trending markets. I want markets that are trending well, which the Nasdaq has been trending very well in recent years. That's not going to happen forever. There will be a point where you go into a more range bound environment. But right now, we're trending well, and I'm going to continue to play that. I have a Russell position. IWM is what I sold puts on yesterday. Stock market opens up in 15 minutes. I'd love to see the Russell bouncing back. I sold, what did I sell? 215 puts. To 211 puts. The options world is closed right now. Options market will open up in 15 minutes. This will probably be up probably $800, which is awesome. 800 is my guess. We'll see. Options market is a little different than standard stocks, but I sold this put for $2.95 per contract, which is a max potential gain here of like $1,500, just shy of $1,500. But the Russell is, I think that the Russell has, I've said this last year, so I have to be careful. Well, beginning of 2024, I mentioned incorrectly that I thought that the Russell would have an outperformance year. Dead wrong. Did not look good, right? If you watch my beginning of 2024 year, where I talked about like what my trade ideas for the year were, I talked about the Russell. I talked about gold. I was really right about gold in terms of being bullish on it, but gold went way further than I thought. I'm gonna double down on my idea that the Russell could do well next year. but it's really dependent on if the Fed can actually get rates to come down. So that's where it's not going to be like the main position of my portfolio. But if Russell stocks do come down, so if IWN comes down, I sold this put, I collect $1,500 no matter what. I'm up $1,500 on this trade right away because I sold the put. When you sell a put or you sell a call, you collect money up front. The options buyer pays you that premium to take the trade. So I collected $1,500. If this market drops, what happens is I have to buy 500 shares at $211 per share. That's the contractual agreement. That is what the options buyer gets out of the exchange. They can sell me 500 shares at 211 no matter what at any time until the expiration date, which is out to 31st of January. Now, why do this? Why not just buy and sell the Russell? Well, what's wonderful about this is that I sold this yesterday when the VIX was really high. So the premium was pretty dang juicy. $1,500. I'll take that, put it in my pocket, and I'll buy the Russell if I need to, if the market comes down. Russell already looks a little oversold in my opinion. This is the weekly chart. Take a look at the daily chart. Basically I'd be able to pick up the Russell around the 200-day moving average. Happy to do that. Happy to do that and hold on to it if I had to for some time. Can you buy back before expiration? Yes, you can. I could buy back this. I actually, when this opens up, guys, I could buy this back. What that would mean is I buy back the obligation to buy those puts, buy those shares from someone else, the options buyer. I could buy back the sell put, but I'm probably going to just let it run to expiration because I actually don't mind if I need to buy the shares of the Russell. I would like to get 500 shares of IWM. That's why I sold the put. I don't mind getting assigned. That's what they call that. When the put buyer exercises their contracts, meaning I have to buy the shares from them, that's the point. So anyways, guys, I'm not going anywhere. Don't worry, but I'm going to run a quick break. I get my security system's beeping. So let me just go shut that off and I will be right back. We're going to roll just a quick break to thank a stream sponsor. I'll be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Okay, sorry about that, guys. There's some sensor that's acting up on my security thing. Anyways, yeah, so we're talking about the Russell. It's a trade idea for the new year. We'll see where it goes with that. I'm not really in a rush to buy the Russell because, man, buying the Russell has been kind of a weak strategy the last few years. I mean, look at this. So take a look at the weekly chart of the Russell and compare that to the weekly chart of the Nasdaq. So the thing is, sometimes people say, Nick, you only go long indices, and that's the only time your strategy works well. That's a fair criticism of my trading. But here's the thing. Even if you're somebody who is predominantly long only, like I am, what you choose to go long and when you choose to go long are really important. Had you chosen the Russell as your primary thing to be bullish on, you probably did far worse than someone who chose the Nasdaq. Now, what did you choose, Nick? Were you correct? Not entirely. I was long the Russell. I played some options on it this year. I was also very bullish the Nasdaq. That helped. And I was also bullish on gold. I was not very bullish on the Dow, which did quite well, but still underperformed the Nasdaq. And going into the new year, I remain bullish on the Nasdaq, but it makes me a little bit nervous because the Nasdaq has had such a ginormous push. That's why I'm going to keep a stop loss on the trade. Because again, if this thing tanks and rolls over on a much bigger scale next year, I don't want to like just hold through that, right? I'm not a buy and hold investor. I mean, I do that. I do some of that. But this is a trade, right? Where I have a good bit of concentrated capital long the Nasdaq. I'm not long and pray, right? I'm not buy and pray. I'm trying to be calculated with it, trying to manage risk. Nick, you're very transparent in your trading, showing your P&L. Always, what year was your best year in trading and what was your worst year? How much in percent your account goes up and down? Can you do it, please? Yeah. So my best trading year in terms of P&L was 2024. Like profit, like how much money I made in the markets this year was the best I've ever had, which is awesome. The best percentage was 2020, where, you know what? Let's go look. So 2020 was probably my best, absolutely my best percentage year. 2020, guys, I'm gonna just be transparent with you. During this account's early stages, I was absolutely more aggressive than I am now. This account has scaled up, meaning I started this account with 50K in it. Now, granted, I have added much more capital over time. And as I've added more capital, my risk tolerance in this account has dramatically reduced. Like, because I don't need to risk massively, but you can see the percentage returns, 20% in a month, 18% in a month, 10% in a month, 2%, 4.8. These kind of numbers were once in a lifetime. And the reason I say that is because 2020, I had one of the best calls of my life, which was in 2020, when you had these ginormous drops in the stock market, I took a very large risk. This account could have blown to zero. If I'm being completely transparent, the account could have blown to zero, okay? Because I was using some leverage, but I had a once in a very rare opportunity when this was happening and the Fed came in and said that they were going to stimulate like crazy the economy. I took a very heavy bet that the market would recover. And it recovered so aggressively and so violently that it acted to turn my account, like it doubled it very quickly. Now, when I say that that was a leveraged, risky, once in a trading career circumstance, I could not produce these sorts of returns reliably or consistently going forward right now. I made a significant heavy bet that the Fed's ability, the US economy was actually pretty strong going into COVID. It was decently strong. So my bet was, I think the Fed can pull this off. I think they can print $1 billion, jillion, trillion and keep things afloat, because the fear in the market was so high. People were so scared during COVID that stocks were trading at really great prices. And I went long things like Tesla, QQQ, Nasdaq. I was trading this rally, tight stops, heavy size. It's kind of a crazy story now that I'm telling it back, but I took a very heavy leveraged bet. And since then, have significantly scaled down the size of my account, especially after 2022, which was a terrible year. So this account, which is up massively overall, it's up 208%, had an exceptional 2020. 2021 was also an exceptional year, but 2022 humbled the heck out of me. It was a negative year for me. It was painful. And in 2023, I said, okay, I'm scaling way down. Still had a phenomenal year in 2023, and 2024 has also been really, really good. But I stay transparent to show you things like this because I honestly don't give a you know what about, I've been on the internet sharing my content every day. I don't care what people say. I think that's honestly, as a content creator, one of my strengths. I don't really care if people have criticisms, if they say I'm, oh, you're doing this, you're doing that. Look, honestly, I've done this for so long. I'm very confident in what I do. I'm confident in my trading. I'm confident in who I am as a person, my transparency. I'm not the greatest trader in the world, and I don't claim to be, but I show you guys real stuff because I know someone out there watches my content and they feel more assured listening to what I have to say because I try and just be authentic. I show you my account. And that's why I do that. Like, I think there's a lot of people, and I hope that, you recognize that that is painful to do. It's really hard to show your account to the public because people will, have lots to say about what you're doing. And, I do that because I know for people who are out there trying to figure this stuff out and learn stuff, that might actually be really helpful just to see somebody actually going through it and showing you what realistic trading looks like over the years of doing it. So if you appreciate the transparency, do me a big favor, hit the thumbs up button, subscribe. And the other thing is, just so you know, every trade that I take, every single one, this is the other reason that I show you my account. I sell a signal service, and signal services get a bad reputation because most people who sell them don't produce any sort of track record to go alongside with them. The trades that I take, my QQQ positions, my Nasdaq trade that I'm in, my Bitcoin trades, every trade that I take on this account, every single one, good and bad, gets shared in our Discord server. If you're interested in joining our Discord server, there is a fee to join. But if you're serious about this stuff and you're looking to learn, it is highly worth it. a1trading.com/VIP. If you're interested in joining our Discord, you can get every trade I take sent to your phone. So if you're interested in that, the other thing to use is if you want to join the Discord, at checkout, punch in the code YTVIP, and you'll get a nice discount off of the group. That's our subscriber discount code. Take advantage of that if you're interested. Happy New Year to everybody. Thank you for all the Happy New Years. MLK Gaming, do you use Python models like hidden Markov linear regression mean reversions to trade? No, I don't. I remember your S&P buy trade in 2020. You mentioned the 200-day EMA. You've really been around for a while if you've been watching me since 2020. That's awesome. Yeah, I mean, 2020 was an absolute story trade for me. It was super, super risky, but fundamental analysis kind of like guided me through that. And what I mean by that is most of the time when the Fed stimulates massively, when they print a ton of money, most of the time the stock market finds a way to love that. And that's what happened in 2020. People were terrified because they thought the whole world was going to shut down. And it did. And it produces a ton of inflation, but economies around the world just printed so much money. And it found its way right into top S&P 500 companies, which made them, go crazy up. Stock market just opened up, by the way. Let's take a look here, just see what's happening. I'm long the Nasdaq as a swing trade, so we'll see if this can end out the year on a higher note. Been a couple sell-off days here recently. Had a little bit of a recovery yesterday, but gave back of it in the afternoon. So we'll see. Bitcoin's making a run for it. That's awesome. I'm back in profit on my Bitcoin trade, I believe. Yep. Back in the green on Bitcoin. We'll take it. Just barely, though. I still have my stop below here on IBIT, which is a Bitcoin ETF that I trade. I trade predominantly ETFs because as a US trader, in fact, actually, can I show you guys something really quick? I get questions all the time about brokers for US traders, for UK traders, for European traders, Canadian traders. We built this page to help traders out and to help ourselves out, if I'm being completely honest, because there's a lot of referral links on this page. Full transparency. I'm never going to, you guys know I call a sales pitch every time I give it to you. But if you're looking for a better broker, check out this page, a1trading.com/brokerage. We've done research for some of our favorite brokers by country. Now, the reason that this is helpful to you is because every country has its own set of like regulations, limitations, things like that. For traders in the US, I often get the question, why can't I trade XAU USD? And the reason is because XAU USD is what you call a CFD, or contract for differences, and those are illegal to US traders. We can't trade this. If you're able to trade this, you're on an offshore, unregulated, low-key, probably sketchy brokerage. So gold traders in the US have to trade it either through futures or the way I do, which is through an ETF, GLD. So for US traders, just click United States. I use Webull. You can sign up there. And if you're a Forex trader in the US, Oanda has a welcome bonus now available. So, and all of these different links have special sign-up perks for most countries. So if you're watching right now, head over to a1trading.com/brokerages, or /brokers, click your country and see if there's a good offer currently available. We update this page very regularly. So it's a win-win for you guys and for A1 Trading behind the scenes. We have a Julie who works on our site, has done a really good job putting this page together just to help traders find better brokers for their country. Reason CFDs were banned in the US because people lost too much money, not because it's sketchy. No, there's not anything sketchy about CFDs. What I said is that brokers that are scapegoating the US law to offer CFDs to US traders are probably sketchy. CFDs themselves are not sketchy. They're just a leveraged product that the United States does not allow their traders to use. Look, I don't make the rules, but if you're a US trader and you want your money to be protected, my opinion, I don't trade on offshore or unregulated stuff because your money's not safe. If you trade on a broker where they can pack up and run with your money at any time, you're asking for trouble. And that has happened in the past many times with US traders getting kind of like locked out of accounts or withdrawals refused. So for me, I don't mess around with any of that stuff. The brokers that we have on our site are all regulated in the countries that they're available to. So sorry, my computer's freezing up. Okay. Anyways, I think that's probably going to wrap up the stream for me, guys. It's been awesome. 2024 has been an amazing year. for the stream, for overall, the trading community. I feel like there's been a lot of cool stuff. This year was really big for myself and my team. And I hope you guys also had a great 2024. I'm really excited for 2025 with you guys. Trade safe the rest of this year. And I look forward to having you all back next year on the stream. Thank you very much, guys, for watching. Remember, check out a1trading.com for free courses, brokers. You can check out the Edge Finder. You can get access to our VIP group. You can try the Edge Finder for 30 days. There's so much cool stuff available on our website, a1trading.com. Head over there, especially if you have some time. You can join our Telegram channel. We have courses available that are completely free, brokers and prop firms, indicators available. You can join our Signal service, get access to the stock box, Edge Finder, and so much more. We got a big year coming in 2025, guys. Happy New Year. Thank you very much for tuning in. Have a wonderful rest of your day and your year. See you guys.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.